Happy Monday, traders. Welcome aboard to a new session of charting across the board. Today is August 18th of 2025. For those who are new, thank you for joining us. We're going to be presenting some technical arguments. As you guys know, we are followers or practitioners of technical analysis, mainly from the research of the legends of the past. As we follow the three premises, speaking of technical analysis, we have market action, discount, everything. One of the tenets of the Dow theory, as well as prices, moving trends. And also the last one, history repeats itself. After closing the weekly session close yesterday on the price action for Bitcoin, without further ado, we're going to be jumping straight away into those variables for the price action for BTC once again. Many of you are already familiar with the theory that Bitcoin is a momentum-driven asset. And speaking of momentum, we can observe in the chart that there are some divergences. Class A negative divergences implying that a shift in momentum may occur. Here we have higher highs in the price action, not only now, but previously also. On July, 2 weeks ago or a month ago, we have the first sign of divergence, okay? Where we have, once again, higher highs in the price action, lower highs in both momentum indicators, the RSI as well as the MACD, okay? Clearly observable. Now, I would like to start with an emphasis on a peculiar pattern, a bullish cipher that often present on major turning points, specifically on weekly structures. If you guys remember, if we go back into 2021, only to bring some context here for this particular case, on the cipher pattern, which is a variation of a Gartley pattern with a higher high on the C leg, okay? And as we normally mention, looking left, market leaf clues. This is a pattern that was previously developed back in 2021 at the highs, at the peak of the C leg of the move, prior to this major drawdown, okay? From the C to the D to where? Between the 16,000 and 14,000 region. That was a range for a potential turning point. However, also, it was the culmination of the bullish run at the C leg of the move. A similar theory back in 2021 was presented then, where our arguments are always, or at least sometimes, are trying to be copied by others and take our arguments as theirs. This is a repeated case that has been mentioned personally to me on a DM, that our arguments are often copied in other rooms, which I notice is certainly the case. However, as you guys know, we want to verify that our arguments or technical readings are personal, okay? So therefore, in a similar manner, if you see this argument running later on, which has been already the case, on the minor moves, don't be surprised to see these arguments, okay? So now, going back into that session, 2021, at the peak, the 40 the sentiment was indeed at extreme highs. Please also understand that this is not an indication that it will be the same case, but only applying the premises of technical analysis with emphasis that history repeats itself, okay? Part of the pattern, behavioral pattern. Indeed, technical analysis was called or was named before behavioral finance, right? It's a way market participants interact within the auction in order to the perception of value. Where are these deep value areas? They're highs or lows. So once again, starting at the C leg of the move, giving the same variables on the weekly, we had previously a higher high on the previous high as a divergence. Also in the RSI as well as the MACD. Once again, it doesn't mean we're going to see the same argument, but it is important to be aware of these readings that are developing on major timeframes, the primary trends, the weekly, where we are navigating currently. So therefore, that argument was also presented, and the sentiment back then was negating that could be the case. Okay, November 15, 2021, the previous high. If you are following our previous reading also from the cyclical rhythm that we presented last week, this may also add confluence to those readings if, once again, this were to be the case. Still leg of the move, projection to the CD, major downward pressure after we have some of the other narrative, the FTX, Streaming 40 at the highs with Tom Brady and the FTX commercial, and later on Extreme Fear at the lows. This never changes, okay? However, now we're observing across the crypto space that the sentiment is indeed shifting, also presenting or in confluence with the divergence that we are observing currently. So once again, projection from 2021, the lows were indeed found in 2022, June, before constructing this lower low, slightly lower low than the previous low, where indeed, when you are observing these major patterns on the weekly, this is where true value areas are found for those who are looking for major turning points in the event of a bull run or an early identification structure at those lows. Here, this to me is a premium level, okay? Markets are expensive, overvaluation all over the market, the S&P, Bitcoin, but once again, don't get me wrong, this does not mean that we are going to print a similar reading. However, if that is the case, we can connect all the harmonic ratios in a similar manner to this information or a variation of a Gartley, okay? A Gartley, for those unfamiliar, is the C leg of a Gartley only ranges to the 0.886, okay? That was also the previous idea back in 2021 prior to a new higher high than the previous high. And the only thing that changes is a name. Instead of a cipher or a Gartley, we printed indeed a cipher pattern. Pending cipher, manifested, a low was found, and true turning points occur on this particular time frame. So now, let's focus here on this segment of the move. What can we perceive now, okay, after a major run? The major bull run, for those who wanted to be bullish, were at these highs. Here, we can navigate slightly higher, but we are entering levels of concern, periods of risk, okay? Once again, it doesn't mean that we are going to break the previous low at 75,000 and print that CD correction, okay? But it is important to be aware if, once again, this idea also from July 16th, a personal work in the event of a Wyckoff distribution as an upthrust after distribution in the upper 123 or 124 as a peak, and then we may see a correction towards the 90s, the 80s as the last point of supply before another downward pressure. This chart is based on the weekly as well as the 3-day chart. Please note, this is a personal idea, a personal work from July 16th, okay? A little over a month. But once again, it doesn't mean it will be the case. Only to be prepared and react accordingly. If minor time frames or very structures or minor time frames are now starting to outperform the bigger bullish structures, okay? As the variable for divergences is being respected so far, weakening, lack of participation as of now, indecision, correct? Also, implying here in this inverted chamfer from Steve Nissen from Japanese candlestick patterns. Clearly, divergences are being presented. In the event of an information, we already navigated this case before. Why? Because our same argument was a previous drawdown expectation for a decline from the previous high in January to these lows, and then an upward traction. Once again, we never knew how high these levels would navigate. In a similar manner, we expected at least some turbulences at the 0.886. There was a minor correction slightly higher, and then we have a 30% decline, I believe, where now, if this is indeed the C leg of the move, for that same argument, are we now constructing that CD leg? When will this idea be invalidated completely? Once the C leg goes higher than the 1.41, okay? If we anchor the trend-based fib extension, why? Because the C leg of the move on the cipher pattern is based, once again, on trend-based fib extensions. You can observe here on the cipher pattern tool, there is a C between the XABCD pattern and the cipher pattern. This is based on the trend-based fib extension. Where, if we anchor those levels, the way to anchor this idea is from the X, or from August 24 lows at 49 back to the highs on January, the high, where the expectation once again was to 160. I'm not going to emphasize those arguments comparing other readings from others because we would like to present our own or our personal readings, okay? Apologize the speak in between, okay? It's always a monitor listening to my voice and getting used to this. Anyways, the way to anchor the cipher pattern or the C leg is to anchor the lows back to the highs and back to the lows, okay? Back to the lows at 49. And we can observe here that the first leg of the move for cipher pattern indeed ranges at the 1.13. Basically, since the previous high on July, there wasn't any major changes, only overthrown of this harmonic ratio of the 1.13. Once again, the idea for this cipher pattern will be completely violated if prices does not or do not go any higher than the 1.41, okay? The 1.41 is at 135, okay? 135,000 is the last leg of the move for the cipher pattern. Of course, there can be an overspill at 138, 140 potentially, but this is not the case yet because we're observing a shift in momentum where at the 1.13 on the weekly, once again, we're only ranging so far. Now, if this were to be the case, the new support levels for the bear market potentially could be between 65,000 and 60,000 basically, okay? However, deep value areas are found where are the deepest areas of retracement from the lows to the highs. The first level is always the 0.786. The next one goes to the 0.886 at 57,000. Okay, can that be the case, my friends? I don't have all the answers, but when I see a similar reading from the previous cases or previous cycles, it is important to consider that can be an argument. Therefore, we can approach the market responsibly, okay? Now, if we're not heading straight to those levels, because that's never the case, because remember, this idea took nearly a year, okay? From the highs, November 2021, to that low up until July, June of 2022, before accelerating towards new highs, a new cycle, okay? So therefore, this is once again an idea, a technical proposition I'm working in the background, only cautiously monitoring. It doesn't mean it will be the case. Okay. This is once again an idea from July 16th of 2025. Now, the other argument, because this is based on the weekly time frame, there are other readings on the 3-day chart that can potentially go lower. Okay. This one will put us, also another idea from July, the same month, between 84 and 80,000 region if we zoom in to the 3-day chart, okay? Erasing that major CD projection on the weekly. So therefore, if we move into the 3-day chart, this is the argument that can potentially move or present in this segment of the move, okay? This will be a similar idea, but not computing the entire lows, but rather from the 76 or 74,000 region to the highs, back to the lows, back to the highs, and potentially now CD projection. Okay? So therefore, if that were to be the case, 85 to 80,000 region, deep value areas, these are levels of potential support levels before the major one on the weekly. Another simple approach can also be constructed in support and resistance levels. Here on the 3-day chart, also zooming into the daily, we can observe these support levels, okay? Previous structure resistance indeed became support at 112. If that one lost, my friend, we can have 110 all the way to 100 region, where we also presented those arguments on the previous stream, where indeed someone else came with the same argument on the same day. Not only on the same day, but a few hours later after we launch our stream. It's always the case. It's a pattern that repeats among others trying to take or sabotage a reading presenting as theirs, okay? It's not the first case. It's been occurring since 2021 almost on the previous room. So therefore, this C leg of the move will be the first region for support levels, a bullish shark pattern around 100K, key psychological level. Once again, if that one breaks, of course, we can go into other support levels where liquidity sits, okay? 90,000 to 88, 89, another support, all the way to 75. The reason I wanted to present these arguments cautiously, okay, is mainly based on the readings based on the weekly time frame, okay? Similar to what indeed occurred back in 2021. It doesn't necessarily mean this will be the same case, but if we anchor another simple approach, also will be a trend line, okay? You guys know that we have been indeed in an uptrending market, computing the low September 2023 to the previous low 49 October or August 2024 to this high. We can indeed observe that we are within an uptrending channel. Support levels will be around, once again, 109 within the hard line of this channel. That one breaks, we then have the demand zone where 90,000 all the way to mid 80s potentially, okay? And if that one, of course, is violated, we then have the ultimate support in the 60s and 50s, okay? Moving accordingly without making crazy projections, only respecting the technicals that are presented on the primary trend. In this case, the weekly. Higher highs, lower highs, implying a shift or lack of participation, weakness in the price action for Bitcoin. Okay, there are other readings also that I would like to present. It is another ascending Browning formation. If we anchor the lows from August 2023 to the upper trend line, where once again the majority of transactions occur here, this can be another argument for potential support in the 80s, okay? Where that can be an argument for support before testing the upper trend line in the 150s or so. But as of now, the current information is that there is indeed weakness in the price action. Once again, keep in mind, this does not mean or guaranteed that the same technical reading will be the same as the one presented back in 2021. Everyone, thank you for watching. I only wanted to navigate this particular pattern because a cipher has been occurring across the market. Gold, indices, equities, of course, and cryptocurrencies. A very peculiar pattern that repeats over and over. I'll see you guys on the next one. And please keep in mind that this does not imply the same outcome will be the same as the one presented back in 2021. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers. Bye.